Hi guys, and welcome back to the channel. My name is Rolando, and today is going to be the second video on our series about financial freedom, and hopefully today I can convince you that right now is the best time to invest. Before we get started though, I must state I am not a financial advisor, and everything in this video is for entertainment purposes, and these are my opinions only. Right now is a great time for investors, especially investors in the United States. We're currently on a 10-year bull run, which is the longest we have ever experienced. As a result, more and more investors are pouring money into the stock market, and especially index funds and ETFs. And with many brokers offering zero trade commission fees, a lot of people are finding it easier and having more access to invest. Not to mention some of the plethora of robo-advisors out there, such as Robinhood. So with so many people investing and throwing their money into the stock market, a lot of people are starting to claim that we have a bubble similar to the one that we had in 2008, with so many people investing in the market trading at an all-time high every other day. So many people are claiming that we are in a bubble and we're due for a crash or at least another market correction. Now, I would be inclined to agree that yes, that we have been on a historic bull run and everything that goes up eventually must come back down. But the problem is we have no idea of when the market crash will actually come. Some people have been predicting since 2012 that the market would crash. Now the problem with that is we've had additional 8 years of growth. Had you taken your money out and moved those to safer investments such as bonds or even, cash, which you should never do that, you would have lost out on 8 years of historic returns. And who wants to miss out on making money? Now, I don't remember who said this, but this is a philosophy that I definitely live by. So since we know a crash is coming eventually at some point, we don't know if it's a year from now, 3 years from now, 4 years from now, or sometime in the distant future, but we know it's coming. The one thing to live by is no one can time the market. So therefore, time in the market beats timing the market, which means anytime you have money, you should just place it right into the market. If you don't believe me, let's listen to Warren Buffett.
I really thought that maybe we were giving a little bit the wrong lesson because all the questions would naturally tend toward current events. And so this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it would amount to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works.
So I'm going to assume you all know who Warren Buffett is. And I'm going to assume that because you're watching this video about investment right now. I always like listening to Warren Buffett. And if you really paid attention, he had a couple cool things to say. Number one, presidents come and go. Whether you agree with their policies or disagree with their policies, a new one will come. Also, unfortunately, bad things will inevitably happen. Droughts that may affect humans or floods that may affect major industries. Also, disease such as the coronavirus, which we saw that affected the markets a couple weeks ago. The key thing to pull from all of that is what I've been reiterating this entire video. If you invest your money in the right index fund and just forget it, never look at a headline, never pay attention to the news, just set your money aside and let it grow for the next 10, 15, 20 years or more, you will always make money. So many of you already know what an index fund is, but for those who don't, an index fund is basically like a group of stocks that's all combined into one basket. This gives you diversity and gives you not one single exposure to one stock. Buying one stock is the equivalent of putting all your eggs in one basket. I personally believe in, and I will preach, the importance of index funds. They have a lower expense ratio compared to their actively managed mutual fund counterparts. Now, if you guys want to see a video of the difference between actively managed fund and passive funds, I'll be happy to make a video of that, and I'll also be happy to make a video of how I invest my money and which funds I think you should invest in. It's pretty simple. It's in ETFs and index funds. So let's take a look at some of the worst case scenarios, some of the worst crashes in history, and analyze those and see what would have happened if you would have left your money in or if you have taken it out. Now I have a little cheat sheet right in front of me because I can't remember all these numbers. And by the way, guys, leave a like for me doing this research because it takes me a while to make these videos. And we have that pesky YouTube algorithm, and the more people that like these videos, the more people will watch them and the more I'll get recommended. So I appreciate that. Okay, so let's go all the way back to October 24th, 1929, also known as the start of the Great Depression. The market lost 11% on the opening bell, also known as Black Thursday. And again, on October 28th, more people decided to get out and the market lost an additional 13%. That is also known as Black Monday. Could you imagine losing 11% on Thursday and then losing 13%? People started to panic and they started to remove their funds in droves. At this point, the market was in all full-fledged pandemonium mode. The next day, panic was at an all-time high and the market lost an additional 12%. When it was all said and done, the market had lost 89% of its value. We know this as the lost decade, and it is the worst time in our history in terms of the stock market. The market and our economy didn't start to fully recover until 1941 and the start of a war and put everyone back to work. So we didn't see anything like this or even come close to this until 1987. Again, gotta take a look at my cheat sheet. From October 4th to October 19th, the Dow lost 31% of its entire value in just 5 days. Many were fearful of another Great Depression. Some people pulled their money out, but for those who left their money in, something remarkable happened the next day. The markets grew 102 points, a record at that time. And the next day after that, the markets grew another 106 points. So there was a steep decline and a very rapid incline. If you had just left your money in, you wouldn't have lost any money. But the people that sold at the low and bought back in at the high actually lost money. Again, proving our point that time in the market beats time in the market. We saw another decline in the early 2000s with the dot-com bubble. And those who are my age, we saw another decline in 2008-2009 timeframe with the housing market crash. During that time, markets lost about 54% of their value. And again, investors fled. But the smart investors kept their money in, and some actually poured money into the market at that time and actually bought the market at a discount. Now, the whole point of this video is to reiterate the fact that yes, a market crash or at least a correction is probably going to happen at some point soon, but don't panic. Even if you have money today and you've paid off all your debt and you have some disposable income and you don't need access to this money for at least 10, 15, 20 years, you won't, yes, I'm going to say it, there's going to be some people down in the comments probably upset, you won't lose money. Even in our worst point in history, the Great Depression, also known as the lost decade, if you had left your money in additional 5 years, you wouldn't have lost money. There has never been a rolling 15-year period in our history where market investments have lost money. On average, even with all those crashes, our market has increased 7 to 10% per year. There has been high times and there has been low times, but the market always, yes, I said always, continues to go up if you leave your money in long enough. So this channel is not about day trading. This channel is not about getting rich quick. This channel is about helping you make sound decisions about how to build wealth over time. This is not a quick and easy process of building wealth. Anyway, guys, that's all I have. If you could, please leave a like. I spent a lot of time researching this information, and all I ask for you is to help me fight this pesky YouTube algorithm and hit that like button. If you are interested in these topics and other topics about investing, including how to get out of debt, subscribe to this channel, and I will catch you guys in the next episode. Peace.